Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking out on some volatility here. We'll look at VIX TVIX and XIV. Not going to look at UVXY because pretty much the chart is the exact same as TVIX, just a different magnification of leverage. So VIX, on the daily time frame, we've seen some nice spikes to the upside. There's been some nice day trading opportunity. In terms of swing trading, we've seen some higher lows and higher highs, but not really getting the all-out conviction move to the upside that we often see in very short bursts on VIX. So we're looking at the 200-day moving average resistance, and we have rejected time and time again. This is the fifth rejection we've seen in the past 2 weeks, and you can see we've gotten well above this 200-day moving average, but by the end of the day, the bulls have been unable to close above it. So we continue to close below it. It's at 1320. Higher low, higher high pattern the past 3 days. If we break the low 1223 of today, we will see the bears take back over on VIX. But seeing a little bit of upside, we've got a couple higher lows forming here. Got that nice higher high back at the end of March, but again, no follow through there as we closed at the low of the day and pulled back from there. So the Bollinger Bands are beginning to, they descended and they leveled out, and now they're beginning to ascend. So we'll see if this is going to indicate the start of a slow and steady uptrend. And clearly it's not the big time breakout short-term burst that we are used to seeing. So the weekly time frame on VIX, the last time we've seen 2 green weeks in a row was back before the election. We have not seen 2 green weeks in a row since then, and that is because the bulls have been in absolute full control of the market, and there hasn't really been much fear anywhere. So we've got the 50-week resistance continuing to reject the price. We do have the middle Bollinger Band as support now. It's starting to level out. We'll see if it ascends as well. Same thing with the weekly Bollinger Bands. They're leveling out, and we're going to be looking for them to broaden back out, creating room to the upside. Building a base of support at $11 over the past couple of months, and it's a slow and steady in terms of trying to change this trend. It's going to take a lot of action to change the longer term trend here. I'm looking up at 2301 as a key resistance level, but in the short term, we're just getting a couple little signs here that the slow trend might be shifting to favor the bulls. And TVIX is still seeing lower highs and lower lows. Certainly time decay is not helping out. Time is not on the side of the bulls on TVIX, which is why you do not ever want to be holding a long position in TVIX for more than a short amount of time, because that time decay will eat you alive. So we've got a clear lower high and lower low pattern. We rejected on the middle Bollinger Band resistance the last bounce attempt, and we closed above it today at 36.84. So that is support now. Let's see what the bulls can do with it. We have to break above 43.20, a little double top, in order to break the daily lower high pattern. And we have a low at 32.90 and a low at 32.94, so a little double bottom at the low. And now we need to see a break of 43.20 in order to break the lower high pattern. Bollinger Bands are still descending rapidly. They have to level out and ascend back to the upside to create some room for the bulls. And the weekly time frame, we have not seen 2 green weeks in a row, same thing, since the election, and the bears have been in absolute full control. We're still rejecting from the 4-period exponential resistance. We've seen plenty of weeks close right at that level. It's at 38.13, and we're currently just below it, closing up at the high of the week. And there's some decent bull volume 2 out of the last 3 weeks. Need to see these bulls get over exponential moving average resistances, confirm a bullish reversal candlestick, see our second green week in a row for the first time since the election, and try and get some upside. If we do not see that green week next week, we know the bears are still in full control. XIV, which is the inverse here, has been very bullish, and we are now starting to see the first signs of weakness. So we had the higher low and higher high pattern. We had 71, make that 75.41. And then we hit 75.48. Not exactly a very convincing higher high, but a higher high nonetheless. But it was the break of this support right here, that $70 level, that is now a bit of a red flag. And look at the volume. Bear volume, 2 out of the last 3 days, has been pretty high. especially today with a close at the low of the day. So momentum is favoring the downside here, and we broke $70, so we're looking back down at $65.96. If we break $65.96, that's a more convincing break as this higher low pattern is broken. So the weekly time frame is a bearish reversal candlestick. We negated the last bearish reversal candlestick. We've been holding these exponential moving average supports since the election, and I keep saying that because it's very clearly a marking point on all of these volatility indicators, both bullish and bearish. If we lose the exponential support on the weekly time frame, we're looking down at 65.96. Again, that daily level, lose that, and we're looking down at 61.23. So closing in on a potential bearish MACD cross. There's all kinds of signs on both the bull and bear end that are little early red flags saying start to pay attention, start to look in the other direction. Doesn't mean we're ready to initiate any big positions in the other direction. We always want to be cautious, fighting the trend, but just starting to notice the first early signs that something might be shifting here for the first time since the election. So paying close attention to volatility, looking for potential weakness in the S&P 500. Still not seeing much there, but maybe these volatility clues do end up playing out over the next couple of weeks. I appreciate you watching. We'll check back in the near-term future. Have a great rest of your weekend.